Happy Hump Day, everyone. Thank you all for joining. We will start in just a moment. All right, good morning, everybody, and thank you all so much for joining PCR SBDC today to talk about the 5 C's of credit. 5 C's of credit. I am so happy that you all have taken the time to join today. My name is Colette Moore. I'm the director of PCR SBDC, and have been part of PCR for just a little over 2 years. I was actually a client of PCR. I had my own staffing business, and I told folks I was a good client, I was a bad client. We want you all to be the best clients possible. And one of the ways that you can do that is really learn these lessons about the financial impact on your business. And today's is on the 5 C's of credit. You know, I did several workshops, I'm sure, on 5 C's of credit, but I really didn't understand it. And so today we want you guys to understand it, really understand it, ask questions. We have an expert here with one of our partners. We're happy to present today with Citi Bank. You'll be hearing more from our partner, Cesar Mancia, as we go forward. But we are excited today because you are taking the time to improve your financial literacy to get better. And as you improve, your business will be able to improve too. So one thing, if you guys would all please go on mute, put your questions into the chat, and we will be able to go forward, and we'll be taking the questions and taking points during the presentation today to be able to get those questions answered for you. So one other thing we want to celebrate, a couple of things today, Women's History Month, of course. And so we celebrate women. Yesterday, I participated in an event, Equal Pay Day. I'm not sure if you guys know, but women really only get a percentage of what men get. Over averaging, it is 83 cents to $1. And for African-American women and Hispanic women, it is in the 50s, like not even 60 cents per the dollar. So we want to make sure that we can address that as part of Women's History Month, and want to continue to support our female entrepreneurs. And we know that the men are part of assisting in that process. So thank you all for participating this month and celebrating. Other thing we want to do is celebrate today. I'm not sure if you guys knew, is SBDC Day. This is an annual day, so it's a national day where we actually, we're celebrating this. We are the #1 business assistance network in the nation. And so today is an opportunity not only to celebrate the work that's done and the clients that we support, but we're here to help you on your path to success, help you to meet your goals, your dreams, and your innovations, and all the things that you do to build the economy. So today is SBDC Day. Please use hashtags SBDC Day, and then follow us on PCR at PCR, SBDC LA, SBDC Day, and then I love PCR SBDC. If you would, please take a picture here of that scan, and you'll be able to go ahead and make some type of connection today. So we'll be looking for your posts. You guys, we're looking at posts all day. We definitely want our center represented on this day where we are recognizing the SBDCs and the great work that is done around the country. And we hope that you guys are all just always benefiting from the information, the one-on-one advising as well. And for those of you that might be new to the SBDC, it is a national network of 1,000 centers around the country. We're a partner with the SBA, and the goal is to provide or generate economic growth. Small businesses are an engine for the country. And so when you guys grow, the country grows. And so all small businesses, we want to assist you providing business consulting, training, and resources. We do this throughout LA. Funding, business planning, general management, marketing, and with a key focus, which something we learned during the pandemic was the need for understanding financials better. So you guys are on the call. So we have a whole workshop, series of workshops throughout the year that we are using to help build your literacy, to help you improve in this area. We want you guys to know all that you need to know to work on your business. And so financial fitness is really a key area, and it's actually a specialty area that we created during the pandemic based on the need that we saw. So thank you all for joining. We have a short time today, but long enough for a great presentation and also your questions in the chat. We're supported today by China Spikes and Briagini Sanders on our PCR SBDC team. I know they're waving in the background. You can't see them, but they're helping everything flow smoothly. So you guys get your notepads out. I want to know what you're going to do with this information after you've heard it today. And so with that, I want to go forth and introduce our presenter for the day. Cesar Mancia is VP of Small Business Division and a sales coach with Citi Bank. And Citi Bank is a partner with PCR and the SBDC and a major funder for us. And so we appreciate a grant that we received from Citi Bank, and we're happy that they're participating with us also in sharing of knowledge that will help you all to become bankable and to help you with your business. And with that, I turn it over to Cesar, and he's going to share screen.
Good. Can you hear me? Good morning. Hopefully you can hear me, and it's my pleasure to join you today to go over some small business training here, but ultimately this training is for all of you. And I'm here to answer any questions that I can. Let me tell you a little bit about myself. I've been in banking with Citibank since 2003 in different capacities. I started as a personal banker, worked my way through, and I've been in small business for the past 10 years. I've been in banking though for the past 25 years, and I've seen a lot of businesses grow. And as a Latino and a father of two little girls, my goal ultimately is to help, the small business get what they need, help guide them through the process, and help them understand what banks are looking for. I've done these sorts of trainings now for the past 15 years with my colleague Rashi, and her and I have been with the VDC and with your organization here for a long time, and helping a lot of different businesses understand what banks are looking for. So let's get into this. What are we going to be covering today? What's the agenda? These are the topics I'd like to touch on. What's the money for? What are we looking for on credit reports? What are loan types? The 5 C's of credit, right? The business life cycle, and then some questions that an underwriter has on their mind as they're reviewing your deal. So what's the money for? Is it for expansion and growth of your business? Are you looking to hire additional employees? Are you looking to add additional software or equipment? Are you looking to buy a competitor out? Purchase assets. What are assets? Assets are goods and services and equipment that are going to be used to create those goods and services, right? Cash flow gaps. There's a lot of businesses, and pretty much every business is seasonal. Even doctors are seasonal. What's the slow time of year for a doctor? The slow time of year for a doctor is from December through June. Nobody wants to go to the doctor during December through June. Why? Because we have a copay, right? And we don't want to pay that copay. So the time of year for seasonal time of year for a doctor is the beginning of the year. The busy time of year for a CPA or accountant tax preparer is this time of year, right? Everybody is rushing in to do their taxes, get their tax returns set in, and trying to wait for those refunds. Carrying accounts receivable. We'll talk a little bit later about accounts receivable and what the importance is for us in small business lending. And then purchase inventory. You know, if you're able to get a discount on your inventory, that's what you're going to use these monies for. Trade discounts is another avenue that we like to lend for. You know, if you're able to buy double the quantity of your product, you're going to get that discount. And then ultimately, lastly, is refinancing debt. If you're carrying a lot of debt, let's say in a line of credit, and you want to just get rid of that, you put it into a loan and pay that off over time. So one of the most important things when it comes to applying for a line or loan is credit. And when I'm talking about credit is not the line or loan itself, but it's our personal or business credit, our credit score. And that basically gives us the ability to borrow money from a bank or from an institution to, you know, be able to use that money to either grow our business or purchase something. But we want to see, is there the ability to pay that back? Important for financial stability. You know, if you don't have a good credit score, that's the main thing to start working on. Finding ways to see what's wrong. So pulling up your annual free report from freecreditreport.com, seeing what the issue is and coming up with a game plan to correct those credit issues. The importance of credit for a business. It gives you access to capital, right? If you don't have a good personal credit score or business credit score, it's going to hinder your access to that capital, or it's going to be very expensive. So you can go from a maybe 7% interest rate to a 30 or 40% interest rate. So we want to make sure that your credit is in line, not only on your personal side, but on your business side as well. It helps acquire inventory, or helps a manufacturer acquire material, excuse me, a lot easier. When you're dealing with vendors will extend credit, and they'll look at your credit score on the business and personal side to see if they should extend credit. That's another avenue or entry point into being able to grow your business. Purchase necessary equipment and materials. Again, makes your life a lot easier if your credit score is better. And then it helps manage working capital. If you have a line of credit and during those slower times of year, you're able to draw from those lines and making your work-life balance a lot easier. Why are credit reporting agencies important to my business? The reason being, they help to give you that cash or that availability so that you can go out and find the financing that you need. So when you have a better credit score, it gives you a bigger avenue to look for credit versus when you have that lower, low 600 FICO score. It limits your credit and makes your availability more expensive. It's a way to manage the debt and your obligations. You should make it a habit to check your credit, check your obligations, make sure that your payments are getting applied on time. There's different programs like Credit Karma that can help you determine and see different ways to manage your obligations. It's an asset. It's a way of reducing risk. You should keep an eye on it, make sure there's no fraud happening on your credit bureau. There's a lot of scams out there. There's a lot of links that get text messaged to you. Make sure not to click on those links from parties that you're not aware of, so that you avoid those types of scams. Personal versus business credit. Did you know that there is a business credit bureau? So we here at Citi Bank use Business Equifax, and we pull your business credit score to see what's going on, what's your payment history there. The difference between the two is interesting. On a personal credit report, you're going to see your mortgage, your credit cards, your car payments, things like that. On a business credit report, you're going to see not just the payments to your financial institutions, meaning your lines and loans or business credit cards, but some vendors will also report on there. So let's say you have an account with UPS or FedEx and they issue you a line of credit to mail products. If you're late on those, they report it to their business credit. Also, let's say you have a cell phone carrier or a business internet carrier and you're constantly late on those payments, that gets reported into the business credit history as well. So make sure you're on top of not just your credit cards and lines and loans, but also your vendor accounts, your shipping, your internet, your phone, because that all gets uploaded into the business credit report, and we want to make sure that you're on top of that. So here's my first poll question. What's more important, business or personal credit reports? Briyashini, I don't know if you, there we go. So what's more important, business or personal? And submit your vote there and we'll see where you guys are coming in on.
And then Caesar, before you go on, we have one question that I think will be timely as well.
Sure.
Great, couple of more seconds, you guys, put your votes in. Helpful. All right, Briyashini, let's go ahead and show the poll.
So here's the answer. So business came in at 18%, personal came in at 82%. And if you ask me, both are very important, but you guys are all correct. Personal is the more important report. The reason being that gives the bank confidence that you are able to pay back the dollar amount that you're requesting, that you are responsible, and you are a worthy candidate for small business lending. The thing about small business lending versus consumer lending is in business lending, there's the collateral that we use is a lot different. It's not just your personal finances, but it's actual business. And so when the bank is going to lend, they're a little bit more protective and they want to make sure that the funds that we're lending out are going to be repaid.
All right. And so before we go on with the personal versus business, we did have one question here about Hugh submitted a friend he's working with who has no credit at all, essentially. So no credit report at all, no credit cards or credit lines. So the question is, how or what can someone be doing to get credit? So what is the most effective way to get credit?
So great question. The first entry point into credit is going to be a credit card. So a personal credit card, and start building those relationships. When you look into those apps, like I mentioned, Credit Karma, right? It's going to offer you different products and different credit card products. Look at the one that benefits you the most. Look at whether it's rewards, a lower interest rate, an easier entry point. That's how you're going to start building your credit history. When we do consider small business lending, we want to see at least 48 months of personal credit before you're applying for a small business line or loan, right? We want to make sure that you have a good track record, at least over 48 months before you're applying for a unsecured business line of credit. So personal credit card is your first entry point. So hopefully that answered your question. Okay, so like I said, small business lending is a little bit different than consumer. Our underwriters want to know specifically what you're using the money for. Are you using the money for a purchase of equipment? Are you using the money to bridge your accounts receivable? Is it for cash flow? Is it for permanent working cash flow? Is it for an acquisition? Is it for a land purchase? And it makes a lot of difference. And it makes you more educated when you walk into a branch and you tell the banker, hey, Mr. Banker, I'm here to apply for a business loan for a purchase of a piece of equipment, versus you walking into a branch and talking to your banker and saying, I want to apply for a line of credit to buy a piece of equipment. Knowing the difference between those two things, what a line and a loan are used for, puts you ahead of the game. Because when an underwriter at Citibank looks at your application and you're applying for a line of credit for the purchase of a piece of equipment, they take a step back and say, oh, do these people know what they're getting into? They're applying for a line of credit to buy a piece of equipment. Let me put it to you this way. If you were to go buy a car, would you use your credit card to buy a car and pay a 29% interest versus applying for a car loan, right? So knowing the difference between the two is going to help you present your case to why we should lend you money for your business. So short-term needs are basically needs that are 12 months or less. So common examples are purchasing inventory at a discount, bridging your receivables, cash flow, seasonality, financing product runs. So let's say you get a big order and you need to fill this right away. That's where you're going to use a line of credit, something that you're going to pay back in 12 months. Long-term is something that's going to take you over 12 months to pay back. You're not going to pay off your car in 12 months if you buy it on a credit card, right? You're going to pay it off over, I was looking at a card the other day, now they have 84-month loans. So you're going to pay it back off in over 84 months versus just paying the interest on a credit card, right? So long-term is over 12 months, and it's for capital improvements, meaning you want to, redecorate, remodel your building or your office. Permanent working capital, so you're going to bring in additional staff. You're going to acquire another business. You're thinking of purchasing a new printer, a new manufacturing machine, a new scanner, something like that. Or you're going to make that big jump into buying a building or land. That's where you're going to use a loan. So hopefully that makes it a little bit easier. So this is poll question number 2. Which would you apply for to buy a piece of equipment, right? We just went over that. Is it, Virajani, can you put up that question there? Perfect. Would you use a line or a loan? We'll give everybody a couple seconds, and if there's any questions, I'll take those while we wait for those answers. Okay, and can we see what the poll said? Loan, great, you guys are paying attention. Yes, so for a purchase of an equipment, you're going to use a loan, right? Lines are, again, short-term need, loan, long-term need. So awesome. Here, move over to the next slide. All right, so what we came to listen about, right? The 5 C's of credit. What are they and why are they so important? And these are the 5 C's. So capacity, collateral, capital, character, and condition. And you're going to be surprised on some of the things that we look at as a bank when it comes to these 5 C's. So the capacity. So this is the ability for the business to repay a loan through its own cash flow. And when we think about lending, we think about ways out. And this is the first way out for the bank, right? Meaning that the client or the individual is paying back their loan, and we're going to get back the money that we were lent. So cash flow is basically the movement of money in and out of the business through actions where they're selling their product, they're creating their product, and then it's a revolving circle. So the cash in is through the sale of stocks, payments from vendors, capital from shareholders, or even borrowing, right? The cash out. So when you think of cash flow going out, it's our operating costs, right? Paying for our employees, paying rent, things like that. Purchases, loan payments, right? We borrow the money, we got to pay it back. And payments to shareholders, right? We have shareholders that donate money or help our business grow. We want to make sure that we're paying them back. And then in cash impediments, which are emergency repairs, those unforeseen events, right? You have a client that walks in, borrows your restroom, and then all of a sudden your restroom's overflowing. That's something that you weren't thinking of, and all of a sudden you have to, pay for those repairs. Uncollected debt. So we're going to talk about accounts receivable in the next slide here, but uncollected debt is a big issue, right? You give a client a product and you give them terms to pay you back, and they haven't paid you back, and you have to try to collect that debt. Seasonality, and then economic changes. So that's the capacity. That's the first step that the bank's looking at when it comes to, can this business support the debt that they're requesting? And then on the personal side, we want to see also, what's your debt ratio? Are you paying yourself enough? Do you have enough personal income to pay this loan back if the business were to default? Is your debt ratio above 50%? Most banks want to see that your debt ratio is 50% or less of your income. Are you in a $1 million home and you're only paying yourself $25,000 a year, and you have a $6,000 a month a mortgage payment or rent payment? Are you living above your means? Those are the things that we want to make sure we know before we lend. So that's capacity.
And Cesar, this relates to everything going forward. For our sole props here, the question that came up is, if you're a sole prop, is your business score your personal credit scores? And I would say this, that's the same for all of these 5 C's, so it'll lay on the top of there.
Yeah. So the credit score is the same. So whether it's a corporation or a sole proprietor, we want them to be the same. In our bank right now, it's above 700 FICO scores that we're looking for on the credit score. Okay, so next we move on to collateral. So this is our second source of repayment. How the lender gets paid if a business defaults by not making their payments on their first source of repayment, right? So accounts receivable, and this is one of the major things that we look at for lines of credit, right? So a line of credit at Citibank requires two things for us to lend. First is accounts receivable, and second is inventory. If you don't have accounts receivable or inventory, you're more than likely what we consider a cash-based business, meaning you don't have accounts receivable or inventory. So for those types of business, we would do an installment loan versus a line of credit. So what are accounts receivable and why are they so important? That's basically the actual definition for accounts receivable is money that's owed to a business for services that are rendered. Meaning, let's say I sell these water bottles, and I know it's kind of disappearing here, but let's say I'm a manufacturer of these water bottles, and you guys are selling these water bottles at your store. You come to me and buy, let's say, 10,000 pieces of these water bottles. I tell you, okay, here's the 10,000 water bottles. You have 30 days to pay me back. Take them with you, you have 30 days. So I give you those water bottles, you take them and you start selling them in your store, and then you have 30 days to pay me back. So you've gotten my service, and it's money that now you own to me. That's the accounts receivable, right? So you've received something basically for nothing up front, and we want to make sure that you're getting that money back. So when we look at accounts receivable here at Citibank, we want to make sure that you're receiving the funds within 90 days or less. So we use 30, 60, 90 days, right? Anything over 90 days, we consider it a loss and we won't give you value for, right? So we give 80% value on those accounts receivable. So we want to make sure 30, 60, 90 days, 80% of that is your value. Okay, so this is a poll question number 3. So thinking of the definition of accounts receivable being monies owed for services rendered, does a gym have account receivables? Yes or no? So money is owed to me for services that I've provided. Does a gym have accounts receivable? I'll give you 10 more seconds here. Okay, let's see what came up with the polls, and then I'll tell you the answer. So 76% of you have the wrong answer. So you guys said yes, and that is the incorrect answer. The 24% of you said no. And so let me explain it to you again. So when you go to a gym, you sign up for the membership, right? And you sign up for that membership, and what do? You pay your first and last month, right? So you're paying for the service before you receive the service, right? So you don't get to go to the gym. I don't get to go to the gym and work out for 30 days. And at the end of 30 days, I'm still fluffy, but I still got to pay, right? I didn't get to say, no, I didn't get all, cut up like somebody and saying, I'm not paying you guys. No, you got to pay because you use the services. So remember, accounts receivable, you've received the service, and so you owe money for it. Okay, so always keep that in your head. That's what we look for as collateral. And why do I spend a lot of time on that? Because I want you to make sure that if you do have accounts receivable, you do everything that you can to collect your funds, because we want you guys to use those funds to be able to repay and grow your business as soon as possible, or as quickly as possible.
I want Brianna to run that poll again. Come on, guys. Run it real quick. Throw it back out there, Brianna, if you can. And let's answer that question again on collateral and accounts receivables.
Yeah.
So, oh, no, Brianna, go ahead. All right, guys, let's answer the question again. Go ahead, Caesar.
So no, we don't have, I'll give you the hint. No, we don't have accounts receivable at a gym.
All right, thank you guys for listening. Go ahead.
Yeah. So the next thing, awesome, 100% there. So the next thing we look at is inventory, and not all inventory is the same, right? And let me give you an example. If we have a business that sells, and we'll say, I'm on iPhone. I think this is an iPhone 10, and there's like iPhone 14 right now, right? So if you're a business that sells iPhone covers, your inventory is not as valuable as a business that manufactures those covers and has raw plastic pellets, right? Why is that? Because, like I said, this is an iPhone 10. I got this, a year ago or 2 years ago, and we're 3 iPhones after that one, right? So the covers change all the time. So there's constant change. So it makes it harder for whoever it is that's foreclosing to sell that product, versus the raw material has a higher value because we can sell it to different industries, right? It's not necessarily to a cell phone manufacturer, but we can sell those plastic pellets to somebody that makes water bottles, somebody that makes, plastic furniture, storage, or something like that. So inventory is something that we look at, but again, not all inventory has the same value. The next thing we'll look at is fixed assets, the equipment that's in your location. Is it up to date? Is it older? Again, not all fixed assets have the same value, but we do look at it, and we do consider it when doing the lending. And last but not least, on collateral, cash is always king. We give you 100% credit on your cash, and it is an asset that we like to see, and it's part of our global cash calculation when we're doing underwriting. Next, we move on to capital. So capital, I think of it as the skin in the game. What are you willing to put into your business? Or are you, at the end of the year, just taking everything out of your business and trying to give all the risk to the bank? We want to see that you're leaving equity within your business. Not all of it, but that there is some equity, and you're willing to, sacrifice as much as the bank is, right? On our side, we look at, is there coverage at $1.25 $1.25 for every dollar that we lend. So we want to make sure that there's enough coverage for every single dollar that we lend, that we have the opportunity to get that back. What's your equity? How are your retained in earnings? And that's through, marketable securities, through the real property of your business, where it's located, any investments, intellectual property that you may have. And again, cash. You'll see cash as being a major piece of that capital. We want to see on average that your operating accounts have at least 5% of your operating funds in that account, right? So don't drain out your checking account every month. The banks are looking to see what's in there. Do you have enough money to pay your bills? If for some reason we had COVID 2022, is there enough money for you guys to pay back those loans? So at least 5% in your operating accounts. So savings accounts, money markets, CDs are all great, but we don't consider those operating funds, right? Savings account is what? It's a rainy day fund. It's a savings account. Operating accounts, we're looking at checking accounts to see that you have those funds available. You don't have to do a lot of transferring or changing around to use those funds. So that's capital, your skin in the game. Make sure you have a little bit in there and take the plunge with the banks. Character. This is something that you don't think about, right? When you're requesting a line or a loan for your small business from an institution, the institution wants to know who we're lending the funds to, right? We look at credit score and we look at what's behind the credit report. Is there tax liens or judgments, or are you on an IRS payment plan? Your payment history, from everything from student loans to your car payments. Is everything on time? Is everything on track? If you did have student loans, are you late or did you defer them? That makes a big difference. One of the things that we also look at is your personal character. We will do a Google search here at Citibank on every single one of our clients to make sure that there's nothing negative, right? We don't want to lend to someone that has negative information available where it would put our reputation on the line for lending you money, right? So make sure that not only your financial house is in order, but your personal house is in order as well, because at the end of the day, it's all about your character and your willingness to pay the bank or the institution back for the monies that are lent. So that's something that a lot of people don't know, but that's something that we do search. And we also search, once you start getting bigger and you have a CPA or a tax preparer or someone that provides us your financial information, we also do a search on them to see who you're associating with. So you want to make sure that if you are using a CPA or a tax preparer, that their licenses are valid, right? Because at the end of the day, we're going to go up to them and ask them for financial information to validate that the information is correct. And if their licenses are not valid or there's some sort of regulatory issue with them, it's going to affect you. So make sure that the people that you're interacting with or dealing with also have a clean record, and you do that Google search on them. I know for myself, and this is just my personal life, whenever I do something or going to remodel something here at home, I'll do a Yelp search, right, to make sure that the vendor that I'm using has a good reputation. And I don't just go by the stars, I read the comments, right? Because some people will give a negative rating and it affects their overall stars, but I'll read all the comments, and see, is this someone that I want to take a chance on to do a project? So that's something that I do on my personal life, and you should do it on your personal life as well. We're either doing a Google search, a Yelp search, or something or even, LinkedIn, to see if this is a character that you want to do business with.
Hey, Cesar, is that new? I never knew that when they talked about character search that people are looking for reputation. So is that a fairly new addition kind of to the?
It's kind of an
review?
insight. It's an inside secret. Don't tell anybody that I told you guys, but that's something that we do. And this is Citibank. I've worked at the longest, but I've also worked at Bank of America and City National, and they all do it. They don't advertise it, but we do a character search. And we can have a client that cash flows, has a FICO score of 850, but there's a news article saying that they did something that they shouldn't have been doing, and we will decline that deal. We will not take that risk. Why? Because it puts our reputation at risk, and we won't take that.
Thank you for the insider information. Appreciate it.
So that's character. And then the final C is conditions, situations that are out of the owner's controls that will impact the business. Right now, one of the main questions that our underwriters will ask a manufacturer about will be the fuel prices, how those fuel prices are impacting their receiving of inventory. Has their inventory price gone up? Has their raw material price gone up? And how you're distributing those funds into your product, right? Are you increasing your prices? Are you able to support that fuel pricing increase? So fuel, is a question that gets asked all the time by our underwriters. It's not the first time in the time that I've been in small business that it's come up as a main focal point. But it is now something that's on the forefront on our underwriters' mind, what fuel prices are doing to your business. The pandemic, were you able to survive the pandemic? How you were able to survive it? What impact did it have on your business? Was it a good impact or a bad impact? Surprising, a lot of our small businesses weathered the storm with a lot of the government programs through either PPP or the SBA loans. What did you do with those funds? Did you use them correctly? Were you forgiven for those funds? Do you still have outstanding loans? How did you overcome the pandemic? World events, right? We all know what's happening in Ukraine and other parts of the world. How is that impacting your production, your sales? Does it have any effect? Those are all things that you want to note. And when you're applying, type up a history, type up a bio and provide it to the banker and say, can you please attach this bio to my application so they know, that about my business, about myself, and about the request, and how we're mitigating some of the issues that are happening today. And then the last one here is death. What happens if you as a borrower dies? Is there a key man that's going to take over? Is there key man insurance? Or is the bank going to deal with, let's say I'm the business owner, is the bank going to deal with my wife that handles, she's a veterinary tech and has nothing to do with my business? Are they going to deal with a salesperson that knows what they're doing, or is they going to deal with someone that has no clue on running the business that we're lending to? So those are all things that you can provide in a memo with your application. The more information, you got to think of, just in Citibank's example, right? Our credit center at Citibank for small business is in Texas. And in Texas, when you go to our credit center, it's a huge 2-story building with people sitting in cubicles, basically 4 or 5 feet apart. And they're in that cubicle with no windows, listening to headphones, underwriting deals all day. And when they're underwriting those deals, they're looking at just what's in front of them, right? And if you as a consumer can add a little bit of color, can add a little bit of spice to your application, it catches that underwriter's senses and says, oh, I want to look into this a little bit more, versus just submitting an application and rushing through an application to throw it against the wall and see if it sticks. This is one of the things. So in my position at Citibank, I'm a coach to the personal bankers to try to pull that information from our clients on what they do and have them paint a picture for the underwriter. So you as the client, as the one coming in, I ask you to paint that picture for our bankers if they're not asking you those questions, and provide a website, provide flyers, provide something about yourself and what you're doing, so that when the banker submits your application, it paints a picture for them. The one thing I ask my bankers that I support is, like I said, provide a memo. It's not part of the application or our requirements, but provide a memo talking about paragraph 1, talking about your business, paragraph 2 talking about the owner, and paragraph 3 talking about the request and all the things that would mitigate an issue. So if you know you're applying for a line or a loan at an institution, it doesn't have to be Citibank, it could be anyone. Come in with that prepared. And if you know that you had an issue with a bankruptcy 10 years ago, put it in your memo and say, this is my business, this is about me, this is what I'm requesting. I had a bankruptcy 10 years ago because of an illness, and I've been able to resolve it, and my FICO score is in the high 700s. That will help mitigate some of the issues that an underwriter would have for lending you money, right? And it literally takes you maybe 20-30 minutes to sit down and type up those three paragraphs. But those 3 paragraphs take a little bit of the stress away from an underwriter doing that deal for you, right? If you know that COVID was really bad for your business, but prior to COVID you were running strong, you were making money, COVID hit, and you shut down. You were shut down for 7 months because you couldn't figure it out, but you figured it out and you're on your way back. And 2021 was a great year, almost to 2019 standards. But you believe 2022 is going to be even better. Put that in a paragraph. Let us know. Let us know what's going on so that the underwriter doesn't have to go and try to assume that things are happening within your business. We want to lend you the money. We're not here to say no. We're here to say yes. If we say no all the time, we'll be out of business, right? So we want to lend you the money, but we want to make sure that we're going to get the money back. So those are the conditions. So moving towards the end of the presentation, I just like to go over the business life cycle and for you to consider where your business is at. Are you in the startup phase? So generally that's the first 3 years of business. And historically, businesses, you have a fail rate of 18 months. So after 18 months, 80% of businesses fail. So are you above that 18 months and still in that startup phase? Are you in the growth phase? So years 3 to 10, where you're ramping up, you're selling left and right, you don't have enough equipment or staff to accommodate that growth? Or are you a mature business that's been around for over 10 years, you're profitable, your sales increase, but not at the rate that they used to at the growth stage? Or are you on that decline business where you've been in business over 20 years, you're kind of burnt out, but you're still in it because you have employees and you want to make sure you take care of your employees and their families and all that, but you're on that decline, on your way down, right? So where are you in this business life cycle? This is where I want to open it up, and if there's any questions or comments that you guys can ask, this would be great. So what opportunities or challenges do you guys see in these different phases? So in a startup phase, what are some of the challenges that you guys see as a startup? Anyone?
And you guys, please put that into the chat. And Cesar, if you would ask the question again.
Yeah, so as a startup, what's a challenge as a startup when it comes to, let's say, lending? I can name a few off the top of my head.
All right, and if you guys would go ahead, please put something into the chat. Let's see, what kind of challenges have many of you faced when you were starting up? Some of you have already been in business, others are still getting started. What kind of challenges? New in business, analysis paralysis, cash flow, deciding on a clear definition of should you start a business? Is it hobby or a passion? We talk about that a lot. Thank you, Mary. Customers to start out.
Yeah, that's a great one where we talk about, is this a passion or a hobby? I commend all of you. I commend all of you. I would love to start my own business, but I'm scared. I don't have the strength to start my own business. I'm the primary breadwinner in my family. I have 2 girls. that, you know, I provide my whole life for those two girls and my wife. And to start a business and put everything aside and just take that leap, I'm terrified to do that. But I commend you guys for doing that. For me, for a startup, what I see when it comes to business lending, it's pretty much impossible to get a business loan, right? To get a business loan as a startup, you know, our credit guideline requires that you be in business 2 years. SBA requires a year, right? So you kind of, you're in it alone. You're putting all your skin in the game, right? With a personal credit card, pulling, you know, borrowing money from here, there, from a friend, a cousin, anyone to help you start and realize that dream. So startup, if you're able to get past those 18 months, I commend you, and we're here to help support you and even guide you during those first few months as a startup. Where I see that there's issues as well as those mature businesses, right, that have been around a long time and now have to reinvent themselves because of all the different competition, right? You know, even if you think about, let's say, a fast food chain, right? McDonald's has been around forever, right? But they constantly have to reimagine themselves because of the change in products and dietary needs of people. And so there's constantly that rebranding to get new clients to come to their restaurants, or to keep those clients that have been coming interested in their product, right? And then when the decline stage, it's like, that's the point where, do I sell my business? Do I, you know, teach someone to take over my business? What am I going to do? I don't want to affect my employees, but what can I do to keep this business going? Do I reinvent myself, or do I just shutter the doors and go on with my life and retire? So these are the different opportunities, challenges. Each one faces different things. And like I said, I commend all of you guys for taking that leap and starting your business.
And Cesar, there were quite a few just additional comments on cash flow, and Mary has mentioned whether she wants to monetize the business. Mary, let us help you with that. You can do a profit projection and find out if it's worth your effort. So to start up, and that's a key focus for us. Keisha, to work with your advisor to work on your plan for that. And someone here, I've maxed my credit cards to keep up with the demand. Instead of getting a loan, I kept getting denied. Yes, work with your advisor. Let's get you guys credit squared away so that you can start getting loan opportunities. So go ahead, Cesar.
Perfect. All right, so here's some more inside information. These are the questions that an underwriter is asking themselves when they see a credit deal. So quantitative, which is basically fancy for the numbers, right? Do they cash flow? What's the cash flow trend for the company? How is this year looking compared to last year? You know, do they have that collateral, right? Do they have quality collateral? Is it enough to support our request? What's the loan to value? Do we have a good guarantor? Are they living above their means? Are there any character issues, right? So here's the hidden question, right? So we do the Google search here. What is their liquidity? Do they have cash? Remember, I told you, keep at least 5% of your annual sales in your checking account, right? The underwriters are looking at it. So I'm giving you guys the secret sauce to what goes beyond the numbers and your credit score. Qualitative, so it's basically fancy for the quality of the deal. Do we like the industry? Not every bank lends to every industry, right? So there's some banks that love restaurants, there's others that don't. There's some banks that like manufacturers, and there's others that don't. So make sure that you're applying at an institution that, you know, is for your type of industry. You know, are there high or low barriers to entry for that industry? How long how is this year looking compared to last year? Do we like the management? Are there multiple owners? Are there too many owners? Are there percentile owners where they own 0.001% of the business? Has there been change in the ownership? Is there a succession plan if the owner passes away? That key man insurance, is that in place? Does the request overall make sense? What's your opinion of the request? Does the request, is there a legitimate business need for this product, or are they just trying to get an ego loan? Are they trying to get a business installment loan to go buy a Porsche for themselves instead of buying a piece of equipment for the business, right? So is the request truly a business request, or is it more of a personal request? Why is the client asking for the money? This is a question that we have our underwriters ask themselves. If this was your money from your checking account, would you let this client borrow your money? Right? Because at the end of the day, that's what we're doing. We're pulling money from Citi Bank's checking account and putting it into your checking account. And is that something that an underwriter feels comfortable doing if it was their own personal checking account? If not, what's making you uncomfortable? And is there a way to mitigate that issue, right? So at the end of the day, remember these 6 questions, and as you're requesting funds from an institution, make sure that you're able to answer them, and you've answered them, and paint that picture. Don't wait for the banker to ask you the questions. You provide them. It's your application. You submit the profile of your business. You submit that is 3 paragraphs about your business and the request, and you be ready to answer these questions if an underwriter gives you a call. With that said, I'll open it up for any additional questions.
Great, and I do see some additional questions here. Karen is asking, is there a different approach to nonprofit organizations trying to obtain credit?
Yep, so we do nonprofit lending. We look at, audited financials. We look at the directorship. We look how long they've been there, the awards that they're receiving, what type of nonprofit it is. So yes, there's a lot of additional documentation that's required for a nonprofit. And for us at Citibank, we do require audited financials to apply. But there is no personal guarantee on them.
And Ashley is asking, can an advisor help us get to the next phase? So thank you for showing that chart, Cesar, really great. Yes, an advisor can help you with your planning, understand what your goals are, what does the next phase look like for you, and then help you put your plan together on how you will get there. So yes, an advisor can assist you. Do you look at our vendors for credit rating? Great question, that's from Donna.
So on the Business Credit Bureau, I would say go pull the Business Credit Bureau, but it costs $100 and there's not a whole lot of information on who the vendors are. It just tells us whether you're paying your vendor on time. They do report. So some of the vendors that report are like the shipping vendors. So UPS, FedEx, DHL, they report on there. Your phone providers report on there. So if you have a business phone line, they do report on the Business Equifax. And then obviously financial institutions, we also look and see if there's any liens or UCC filings, any bankruptcies. All of that stuff is listed on the Business Equifax or Business Credit Bureau.
Okay, thank you. And then Ms. Teela's asking, I have credit now, it's been 2 years, so maybe, I'll get approved. How can I get an advisor? I did put that into the chat, but we'll put that back in. Ms. Teela, you can send an email actually to info@pcrsbdc.org, info, and we'll show that separately. How can I separate my personal credit from my business credit?
So the way we look at personal and business is ultimately separate, but we are going to look at both of them. Now, as long as if you get credit, and as long as you are maintaining your credit, the business credit is not affecting your personal, other than an inquiry. But as soon as you default, the bank or institution will go and affect your personal credit. So there's no real way for you to do it by yourselves to separate the two. They are affected in some sort of way.
Okay, and Donna's asking, we have a construction business and we bill as we get the phases done. Can you still get credit?
So for Citi, we don't do contract lending, but there are institutions that will lend based on a contract. Ours are more on accounts receivable and the cash flow when it comes to lending.
And Donna, we actually have a program starting with Meriwether Williams and are providing funding, contract funding, construction funding as part of working with them. So, you know, they are actually bond and insurance. And so talk with your advisor, start figuring out how that can work. And that is something that PCR has a new program that's about to launch regarding construction lending. So we may be able to assist you. Okay. All right, you guys, any other questions? Does SBDC have any resources for nonprofits looking for grant funding? No, Karen, we can direct you to some other resources. Typically, unless you have a profit component to your not-for-profit, then we can assist you. But typically for not-for-profits, we don't really track those grants like that. Ours tends to be for-profit. Okay. It's Meriwether Williams, but speak with your advisor, Donna, and we can connect on that. Thank you. Any other questions for Cesar? Yes, this is being recorded. You guys will be sent out the recording. Cesar, thank you so much for a great presentation and information, a little peek behind the curtain. I hope you guys learned something new actually today as it relates to credit. So we've got just 2 more things we're going to do. So we'll finish. I thank you guys for holding. I got notes from those that couldn't stay, but I appreciate you guys. So we're going to spin the wheel. We have 2 prizes actually that we wanted to share for today related to credit. The first one is Credit is King, transforming your credit to royalty, and then Get Good with Money. So that's more on the personal side, but as you guys can see, personal does impact your business credit, particularly for small businesses. So they are not independent of each other until you get so large where you know, there's really no overlap, but that will certainly take a while. So we're going to spin the wheel. And for those of you that came in after the first half hour, you may not be on this wheel. So next time, make sure to come on earlier with us. And this one goes to Hugh. Is Hugh still on? Or did Hugh leave us? You got to be here to win this one. I don't see Hugh. Hugh, raise your hand if you're there. All right. So if Hugh isn't there, do you guys see Hugh?
No, Hugh's not there.
Okay. All right. So we're going to spin it again and hopefully we'll get someone who is here. All right. Lena Noel. Lena is here. All right. So Lena, you have won the first book. And we'll spin it one more time. And let's see. And Lena, if you can send your information to Briagini, your email, let's make sure we have that. And Valerie Lee. Is Valerie still here? Valerie? All right. All right. Well, thank you guys. We have.
Yes, I'm here. Thank you.
All right. I like somebody
That's the one I
excited about
wanted
winning.
Yay.
All right. So great. And you will get the Get Good with Money. You guys, we
good.
have more financial workshops coming. So Cesar is going to be doing a series for us. The next one is April 13th. And this is all about the credit score. So just like you guys found a little peek behind the curtain, Cesar was going to help us to understand what that credit score really means so that you know how to review it. Then we'll be doing types of loans and then loan terms. And then we have one coming up in May with California Bank and Trust. Today, for the rest of SBDC Day, we're working with Google. Whoa, isn't that fascinating? Because Google came up on the information today. So grow with Google. We're doing this with Roberto Martinez. Launch your business with customer-focused marketing. This is again in celebration of SBDC Day, and it's about creating your brand, your right audiences, and shaping your customer journey, which may be critical as you're going to get lending now too. So you want a good story digitally. And how do you do that? One of the other ones I mentioned, profit projections. We have a whole list of workshops you can scan with your smartphone here. If you guys want to scan this, or you can always go to PCR SBDC for workshops. And then last thing, please put into the chat, what are you going to do as a result of what you learned today and by when? You guys are all learners. Let's go. What are you going to do with what you learned today? Put into the chat. Tell me, what are you going to learn? What are you going to do with this information? What's your first thing you're going to do? Anybody going to run their credit report? Okay, you'll go through the presentation again. Chrissy, thank you. What are you guys going to do? Okay, pull yourself up on Google. That's a great one. All right, Valerie's going to take that book and read. She likes a good book. Okay, Valerie, thank you. Okay, run your credit report with an action plan to build your credit score. Karen, thank you. That's what I want to hear too about the credit. Go through the presentation. Also, you need more questions answered. And Cesar, somebody did ask if they can contact you directly. If you want to put your information in the chat, that's great. And then you can also work with your advisors as well, specifically on credit. And you'll watch the presentation again. Okay, get a Yelp for your business. Yelp, you know what? I know Cesar looked at Yelp. I used to have Yelp when I had my business. I don't know. Sometimes I had mixed results. I still use Yelp. You have to really manage it. You can use Google as well. And so that's another one. Make your business profile stronger. Great. All right. Excellent. Excellent. Well, you guys, thank you so much for sharing and for taking the extra time today. For coming on, helping us to celebrate SBDC Day. We celebrate you guys because we wouldn't be in SBDC without you. And so we thank you. Is there something there? All right. So we thank you guys for coming on. Please go here, tag us here, and put a nice note in. We'd appreciate it to let our national folks know the work we're doing with our advisors. And that's it, you guys. Have a wonderful day. We'll see you at our next SBDC event. If you can make this afternoon with Google for SBDC Day, we look forward to seeing you there as well. May you have continued successes with your business and continue to learn how to grow and succeed. Have a great day, everybody. Thank you, Cesar. We'll see you in a month.
Thanks for my book.
Have a great day.
I appreciate you. Bye, everybody.
Bye.